Next, if you want to buy half a share of Apple, Charles Schwab is now going to let you. The brokerage's founder telling the Wall Street Journal it's part of an effort to attract younger clients to its platform. Kate Rooney is here to explain more about this, our CNBC.com markets reporter. But because the thing is, Charles is getting some headlines because they're the first of kind of the old school platforms to do it. But all the new school guys have been doing this for years.
Right. If you ask them, they really set the trend here. So SoFi is probably the most popular one that has done this. Robinhood has not done it yet. But something we know from the data from Robinhood and from SoFi is that millennials and first-time traders like to buy names that they know. So Amazon, for example,
they just can't afford to.
They cannot afford.
It's $1,500 a share.
Exactly. Netflix even is expensive. So the names that they would want to know and buy, they can't. So they were sort of priced out there. And SoFi did this last summer. They said since they launched that ability to trade a fraction of a share, they've seen Amazon shares 200 times the amount of people that were holding Amazon now have it on SoFi.
I will repeat what I said yesterday in a different context. Split your stock.
Yeah.
In fact,
I was
serious.
thinking about you as this news came out. I said Bill was just talking about this.
It's an emotional issue for a lot of investors, but not being able to buy shares of companies they like. But I thought the trend was more toward exchange-traded funds anyway.
Yeah, right.
You know, everybody's buying ETFs now.
And free ETFs. That's something that SoFi also offered that we saw at JP Morgan pretty soon after SoFi announced that. So no, we're going to do that too.
And that's been the explanation. So people say the reason why they're not splitting anymore is because people will just buy an ETF, like the QQQs, for example, or some kind of ETF with exposure to those names instead of buying the individual stock.
But the reason I bring that up is I wonder how much business Charles Schwab's going to garner.
Right.
If everybody's buying ETFs.
That's true. That's true. It's a little bit different in those individual stock trades. We'll see, but they're trying to get that high net worth individual and millennial. They kind of grew up with the baby boomers, and they say compared to Robinhood, they have slightly more wealthy.
Also, if you want to own Amazon, it's not that you want to own the whole ETF that Amazon has been put into, because it's a lot harder to do your own research, to kind of track what it's doing. I mean, if this is going to be your entry into owning equities, then it makes sense to own the individual equities.
But does it make sense to own half or a third or a tenth or whatever the number may be? I do wonder about the mechanics.
I was just wondering, is it hard to then sell a fraction of a share to find a seller?
It's interesting too, something SoFi brought up, that when they first launched stock trading, people were buying shares of GE and Ford, and they were like, why are millennials and young people interested in these old school car companies? They realized because it's a $10 stock. So they were like, that's why people love GE, not necessarily because...
They bought those the same reason they buy $2 Chuck.
Wine in a bag, exactly.
But that actually tastes great. Anyway, Kate, actually stay with us because this next one is right up your alley too.